Welcome back. It's now time for the CNBC-TV18 and Grant Thornton's monthly deal tracker, where we tell you all that transpired in the M&A and private equity space during the period. So April turned out to be mixed, with the overall M&A market witnessing a few big deals, including that prominent acquisition of JP Associates cement business by Ultratech Cement. PE investment activity, though, decreased marginally during the month. For more on that, I'm now joined by Prashant Mehra. Hi, Prashant. Good to have you on the show. Take us through the key highlights of the month gone by, and what is the reason for PE activity dipping marginally?
Yeah, hi Kritika, thank you. Kritika, the month's been interesting. We've had about $5.5 billion of deal inflows across over 100 transactions. The key contributor to that has been domestic M&A, which continues to grow and has contributed substantially by about $3.6 billion. Within M&A, domestic M&A has been very strong. It's been grown over 2.2 times as compared to the same period last year. Inbound, outbound activity has been nominal. As far as private equity is concerned, it's been at par. It's contributed $1.9 billion, which was around the same figure as April 2015. But what's interesting is that the average deal size has gone up slightly, which is again an encouraging trend. So overall, an interesting month with the key focus on domestic M&A, which is definitely good for the economy.
Fair enough. Break this by sectors in that case, Prashant. What were the key sectors? We saw, interestingly and on a deal-to-deal basis, sectors like cement and infrastructure shine out. But how sustainable is deal activity if you look at the cement, power, infrastructure space?
So manufacturing sector has actually been the highlight for this month, which has seen about $2.7 billion of deals inflow. Within M&A, two-thirds of the whole M&A sector belonged to the manufacturing sector. Even in the PE space, it contributed to about 16% of the deal inflows. The other sector which was a major contributory was telecom in M&A. And coming back to private equity, the usual suspect, IT has dominated the sector with about 44%. With the substantial activity having been realized in the manufacturing sector, both in M&A and PE, it's encouraging and both essential for the growth of the economy and the deal flows. Since within manufacturing it's been focused on the infrastructure sector, that's really the call of the hour. The government is doing its bits to bring about reforms and push the infrastructure sector, and I think we will see activity continuing in the next few quarters in the manufacturing and especially the infrastructure sector.
All right, some interesting trends there. Thank you so much, Prashant, for joining in with that. But